Good evening, traders. This is the market analysis for 28th of June 2022. Today was an extremely choppy day, and even though we opened with a bullish context, as I was telling yesterday, the price band of 15,600 to 812, 820 is a crucial reference that you need to look out for. And opening above that will change the short-term context of the markets to bullish from bearish. And we had a gap up opening above that, but the gap could not sustain. I, in fact, was looking for low probable rotations to 50, the same price band 15, 812, 820, and also shorted the market as I updated in the Telegram channel. My initial short was on a 5 minutes time frame. This is where I initially deployed my shorts, seeing the fact that the buyers could not hold up the prices, but limit sellers were fast absorbing the market longs. But my stop triggered at 15,920, and then my second short was once we broke the 15,880 price band, because to the upside I could not see any initiative buying or continued buying, because once limit sellers absorbed the longs, and we saw that those overnight longs also booked profits at some point as per order flow, but then we did not see a buying continuation, and fresh longs being open to push prices up is the reason why why I took a second shot basically below 15,880 with an initial reference of 15,820. And this was a short trade in which I opened this short trade around 10, 10, 15, and from there with a stop loss of days high, I continued the trade till almost closing. You can see how buyers were quick to jump in. So what was interesting today is that sellers managed not to let prices break through the days high once the opening days high was printed at 15,930, but then buyers just showed enough initiative to defend the prices from falling any lower, preventing a complete liquidation of longs, but they did not show the initiative to push prices higher. So that's the reason we were trading on a chop. And I squared off my trade somewhere between 3:15 p.m. as I shared in the Telegram channel. Tomorrow's opening would be quite interesting. If we look at it from a volume analytics perspective, if at all we slip below 15,820 band, we break previous day's low and continue trading into it, there is a good chance that the gap will be filled. And as for price action, since as a thumb rule, since I do not make a bias between gap areas, is the reason why I did not carry any overnight positions. The short-term context is still bearish. I will not be looking to carry any positional trades until we see a major liquidation, heavy shots coming in as per order flow, and we break 15,600 zones. But again, since shorts managed to defend the upsides today, and we saw a lack of buying initiative. I did not even carry positional longs. I don't have any open positions as of this moment. So tomorrow we need to wait and watch which direction will the market take. If at all we manage to break through 15,900, 15,930 levels, then the next leg of up move can be seen. But between that, index can be choppy with a slight tilt towards bullishness until we break 15,810. So these are the kind of market context, these are the kind of situations where order flow comes in the most useful, because as it's a stalemate between buyers and sellers as of today, with a slight tilt being in favor of buyers. When we look at the tape tomorrow, when we start reading the tape tomorrow at open, we can have a much more clear picture of who is beginning to take control of the markets, whether it's large buyers or large sellers, and we can follow their footprints accordingly. Even in case of Bank Nifty, it is the same. Usually on Mondays, I open positions for expiry, but as I said, it's a stalemate. For now, I did not open any positions even for expiry from an option selling perspective. If we manage to scale above, let's 34,000 tomorrow, then I will slowly begin selling put options from a positional point of view, and I will not be looking to carry home any overnight calls. Any calls that I short, if we start moving down tomorrow, will be on an intraday basis, but not on a positional basis until we slip into the price band of 33,700 and the markets look weaker as per the tape by 2:33 p.m. Because as long as we continue to stay above this price band, the probability of going up is high. This is the reason why I never write options on both the sides. I prefer to sell options from a directional perspective, because as long as we are above this price band, the probability of moving upside is higher, and how much far up is not something that you or I can decide, but the market should decide. And we would still be having, even if I open a position by tomorrow closing, we would still be having 2 days left to expiry. It's vice versa in case of downside. Whenever price is trading below a higher time frame sellers area, or then I will not be looking to open any put shots, because how far the price can go down when the trend is down, the direction is down, is not something in our direction. And even if we choose an extreme strike, which has a higher probability of expiring at zero, a put strike, before expiry there can be extreme wild swings with our stops being taken out. So it's not worth the hassle, in my opinion. That's why I only play directionally when there is a clear context of the markets that I can see. So to summarize, it's a wait and watch moment tomorrow to see what the tape indicates, with the strength being slightly in favor of longs at this point of time. I will be updating further in my Telegram channel in live markets, the trades that I would be taking, who I see, whether it's the longs or shorts that would be gaining strength, that would be taking control of the markets tomorrow. The link to the channel is given in the description below. Uh, if you have any questions, please let me know in the comments. I will try to answer them. If you find the contents of this video beneficial, please make sure to like and subscribe to the channel. Thank you all, and see you tomorrow.